banks consistently win while retail traders struggle daily, because they use what I'm going to be teaching you in this video, and guess what, they are counting on you to never figure it out. Here are some things we'll learn in this video. My name is Victor Snow from Trading from the Soul, where smart money is simplified. If this video helps, like and subscribe. I know you've been working so hard, learning everything you can, and when you try to make a move, it slips away from your finger. That is because you're missing an important piece of the puzzle called the bank's footprint, which refers to the influence the major banks have on the financial markets. They do this through their strategies, their transactions in form of large orders. These guys will try to hide their strategies from you and I, but they can never hide their traces. Mastering this is like having a GPS in the market. How can I get to the place large financial orders are at? Good. Found it. It determines what the total number of trades being executed and make us understand the order flow in the chart, and this will allow us know the long-term direction of a particular market. So all this here represents the bank footprint, which means that the bank's footprint is otherwise known as what? The order flow of the market. To understand order flow of the chart, you have to get really good at understanding the external structure. We have a market movement in gold here. So what's your external structure here? External structure is the primary price movement that establishes the direction of what? A particular trend. Here to here is what our external structure. When we have a movement to the upside like this one, which ones are the primary price movement that establishes the direction of this trend? Answer for me. Where? This zone to here, good. Here to here, external structure, and finally our here to here zone. So picture this as a piece of property you bought in 2021 for $50,000. Then from 2021 it appreciated from $50,000 to what? $55,000 in 2022. And what? From 2022 it appreciated from $55,000 to what? $60,000 in 2023. This appreciation we have from 2021 to 2023 and from 2022 to 2023 are all known as what? External structures in the market. If you're going to master external structure, you have to master this one thing. It is so powerful, which is the internal structure. So the internal structure is the minor move opposite of the external structure. We have our external structure here to here. So these minor moves here now, moves here are our internal structure. Can you see how they are opposite? This is opposite of the external structure. This is an external structure. This is what opposite of it. External structure, opposite of it. It's the same piece of property that appreciated from $50,000 to $55,000 from 2021 to 2022. In 2022, we have the ability to come down to what? $53,000, probably in January, February, or any other months of that 2022, before finally what? Appreciating to what? $60,000 in 2023. So this minor move opposite of this one here to here that occurred in this month are known as what? Our internal structure, guys. One fun fact about the internal structure is that 60 to 70% of the trades being taken in the market are what? From our internal structure. Good. Look, I'm not here to make you feel like you never get to where these instructions are at. I'm here to make you understand with the right strategy and mindset you will get to their ranks. So don't allow them keep you in the dark any longer. It is like actually following the shadows, where you can actually go and find the source of the light. And spotting and mapping out this next one called the BOF is like finding the source of the light in the market. the beof, which means what? The bullish order flow. If this video is helping, give me a like and a subscribe. The bullish order flow is what? A strong level of demand and supply where significant trading volume occurs. It is a place where buying pressure is actually building up for a rally to the upside. This zone here and here are our beof. So it is the last sell candles before actually what? A buy. And where will be your bullish order flow? This zone here. Obviously there is an order block in it. And also another rule for the bullish order flow is what? It must be more than a candle. Can you see in this case scenario, this is more than what? Sell candles what? Before what? A buy. And this zone to this zone represents our what? Bullish order flow. I will wait for market to return back to this zone. I will enter from this zone. And can you see the pips we've been able to catch from this? So guys, if you learn about the bullish order flow and you don't learn the beof, it is a mess. The beof, which is what? The bearish order flow. The bearish order flow rules is just actually what? A buy before what? Actually what? A sell. And this buy is actually what? Our internal structure. And this internal structure right here, this buy represents our what? Our bearish order flow. And obviously there will be an order block in it. So another rule we have this here is it must be more than one candle. What this means is that this internal structure we have right here, if we have just one candle here, it's not a valid bearish order flow. We want at least more than one candle before this sell to the downside. And how are we gonna be taking our entry? We will wait for market to what? Return back to this level. Should we enter here? The answer is no. We want the market to return back to the mean threshold of our order flow. So the mean threshold of an order flow is the 50% movement of an order flow. Here is the mean threshold of our order flow. It is the place the most large orders are sitting at. So how can we actually get to this level? You what? You click on this box right here and you click on settings, right? You toggle between this middle line on and off, and that should give you this center line here. So we will patiently wait for market to return back to this zone, and our entry gonna be few pips below it. And where will our stop loss be at? Few pips above this level. And our first TP can be this short-term low here, and our TP2 can be this range here. Another thing I want to point out here is why waiting for this guy now to be retested. Now if we see something like a structure giving us another short-term low here, what we'll do is move our TP1 from here to actually here can be our TP1, then our TP2. Another scenario I want to talk about is someone watching me would ask, when market gets to our TP1, should we re-enter from this level? The answer is a brutal no. Why? Because this thing signifies that this thing is large financial orders. Now we believe that these large financial orders, once it taps to this major place, it should clear out this retail low or whatever thing we have here, almost with large momentum candle. Now so any retest of this guy is what? Actually a bad idea to re-enter from here. In most case scenario, we see market what? Take out this order flow. So back to what we have, our first TP here and what? Our second TP here. And once market gets to this our second TP and does a break of market structure, here becomes our external structure, and here becomes our new dealing range here to here. The next thing is follow the same process. You mark out our order flow, but we have a problem here. Our problem is we seem to have multiple order flows. So question here is, which order flow should we actually trade from? Is it order flow 1, 2, 3 or 4? to select the order flow to trade from in this scenario, what we use this room, we only trade last unmitigated order flow. So let me use this to explain this thing for you now. We have a buy here, right, and a sell, and this is our order flow one. Is this guy mitigated or not? It is what mitigated. So we have another buy and our order flow here, and what is sell here. This guy is what mitigated or not? Mitigated. So we have another buy here, and boom, market just returned back here, and this is our order flow here, third order flow. So is this guy mitigated or not? Answer for me. It is what? It is not mitigated, which this guy is actually our zone to trade from. I want you to picture this as what a small coffee shop in your neighborhood. For weeks, the shop have just small customers coming in and out, coming in and out. So one day, a local food blogger discovers the shop and writes a glowing review about it. Slowly but gradually, people started entering the shop. More customer each day. Eventually, the shop reaches its greatest peak with much large customer coming in and out. So this quiet period is known as what? The order flow of this movement. So I'm gonna make my entry from here, stop loss above here. So in this our scenario here, we'll pick this fourth order flow right here. So we're gonna make our trade from the main threshold of the order flow, stop loss above there. I'll wait for markets to return back there, and TP1 I'm gonna be our TP2. TP1 reached, okay, and TP2. And once we have a break of market structure, here becomes my external liquidity, and here becomes my new dealing range. So question here is, where is our order flow to trade from? So here we have an order flow here, one order flow here. Is it mitigated or not? Actually, this guy is mitigated. This is different between unmitigated order flow and mitigated order flow. Can you see in this scenario now, we have a market move down here level, took out this low, retested this level before making a break of market structure for our new dealing range. But can you see this unmitigated order flow that we actually crave for? How we just took out this here now, went directly and broke market structure without retesting here now. So this is a bad idea to trade from. In this scenario, now that we have this order flow mitigated for us, now what should we do in this scenario like this? So whenever we have something like this, rather than trading from the order flow level, we use number 5 rule, which is what we trade from the order block level. So I'm gonna put my entry from this order block level, stop loss above it, and wait for market to retest back here. Crazy, right? I know what you're thinking right now. If this strategy is really so good, why keep it to themselves? Now I want you to imagine you are in a race. Everyone is running, putting in the effort, but there's this shortcut few elite runners know about. Do you think they would tell the rest of the runners about it? That is exactly what happens in trading. Think about it when Jim Rohn said that knowledge becomes power when it is shared. But in the world of trading, power is keeping it to yourself. So this is every rule for the bullish order flow and the bearish order flow to take note of. So we're going to be taking an example with Eurusd-Gbpusd from the 15 minutes time frame. We have our external structure right here, a buy before actually what a sell, and this is our external structure, and this is our new trading range. Here is our order flow. Can you see that our order flow has more than one candle? So we'll go ahead and mark out the order flow of this movement. So we've actually checked number 1 and number 2. Then we'll make sure we include number 3 and number flow, which is we want the order flow to be used once and only last on mitigated order flow. So is this guy mitigated or not? The guy is actually mitigated. Can you see here, touched before moving to the downside? And which rule do we use for this is number 5. When we have no unmitigated order flow, we trade from the order block level. From here, this is our order block level inside the order flow. So we'll go ahead and check from number 3 to number 5. So I'm going to be placing my entry right here, stop loss above this level, and see how the trade unfolds. Okay, retested to our entry. We are in the setup, guys. and here gonna be this low here, short-term low gonna be our first TP. Can you see the first TP is actually smashed for us, guys? And let's see whether we can get the second TP. Okay, seems like we're almost coming back to our entry. And can you see that is a full take profit for us, guys? Catching this type of setup occurs in every Tuesday and Wednesday when you actually get the high or low of the week. I shouldn't be sharing this in this video. Before the end of London session, you should be able to get the low or the high of that particular week. Back to what we have here. We made a break of market structure, and what did I say about this? Once a break of market structure happens, we have what? Our external structure and our new trading range right here, which will bring back these rules to trade from here. We just mark out our order flow, and we can see this particular order flow what has been mitigated before we made a break of market structure. So it is a bad idea for us to enter from here. So it's our order block level that we are looking for. So gradually wait for this guy to return back to the order block level. And can you see we didn't return back and we made a new break of market structure? Should we be expecting to trade from this order block and order flow? The answer is no. Once a break of market structure occurs, this is our external structure and our new trading range. So we ignore and leave this guy out of the market. So a buy what before a sell, and what has more than one candles. We've checked number 1 and number 2. Can we see now? Here is our order flow, and it has what? Multiple candles. We'll go ahead and check number 2. So let's make sure the order flow is used only once. And we just realized that this order flow right here is our last unmitigated order flow, which makes it a valid order flow to trade from. So go ahead and check 3, 4. So since this order flow is valid for us, we don't need anything from number 5. So I will patiently wait for the market to come back to the main threshold of this order flow. Okay. Finally, to the main threshold, I'm gonna be placing an entry from here, guys. Stop loss above here, and let's see whether this trade will go in our direction or not. Okay, and that is a full take profit for us. So once you have something like this now and you want to try to re-enter from here, probably your cruise level entered or you became overconfident, what do we see is market will take you out and still what go in your direction. So you must respect number 3 rule. The order flow is only used only once, guys. So guys, if you want to learn more about smart money trading and the most powerful order block trading strategy, click on this video in front of you. If this video really helps, like and subscribe please. So guys, I want to ask, is it lack of knowledge of the retail traders, or is it just that this strategy is hidden from retail traders? Let me know what you think at the comment section.